Hey everyone, welcome back to Corporate Decoder, the place where we take those boring corporate findings and turn them into something you might actually want to watch. Today we're diving into Gyre Therapeutics' latest report, and let me tell you, it's got some twists and turns. Think of it like a medical drama, but with spreadsheets instead of stethoscopes. If you like easy to understand business and finances, make sure to subscribe and give us a thumbs up. We also have a Discord community linked in the description below if you are interested in joining. Alright, let's jump right in. Gyre Therapeutics, a company focused on treating organ fibrosis, which is basically when organs get scarred and don't work so well anymore, just released their financial report for the first 3 months of 2025. The report gives us a snapshot of where they're at financially and what they're planning for the future. So let's see what's cooking. First, the basics. Let's look at their balance sheets. This is a snapshot of what the company owns and owes. Think of it like a personal budget, but for a corporation. So to make things easier to understand and more relatable, all the dollar figures I mention will be shortened. For example, $15,000 is simply 15. Cash, they've got about 15 on hand. Think of this as their checking account and what they can use right now. Property and equipment, this is things like buildings and machinery, are at around 23. Total assets, all the stuff they own, is around 130. This is what Gyre has on the books. Now let's see where they are at with liabilities. Accounts payable are just 122. This is their credit card bill. Warrant liability, think of it as potential future debt, sitting at just over 3.4. And lastly, total liabilities, all the stuff they owe comes in at around 25. Now let's switch gears to the statement of operations, also known as the income statement. This is where we can see how the company performed over the last 3 months if they made or lost money. Revenue is around 22, which is what they brought in sales. Selling and marketing is around 10 times 8. Research and development is around 3. Provision for income taxes is at 900 on. Net income attributable to common stockholders is at just over 2.6. It seems pretty good. The basic net income per share is 0.03, which is 3 cents a share. Diluted is at 0.00, which is 0 cents. Foreign currency translation adjustments is at 171. Comprehensive income, which considers both income and other factors, is around 3.9. Okay, let's move on. The condensed consolidated statement shows what happens with their stock. It accounts for new shares, stock compensation, and how everything balances out. During the report period, stock-based compensation, which is like giving employees company shares instead of money, was at 507. The company also issued common stock under and at the market program. Think of this as slowly selling shares to raise money when the conditions are right, adding 509 to their pockets. Now let's check cash flows. Where did the cash come from? Where did it go? This is the condensed consolidated statements of cash flows. Net income starts positive at 3.7. Change in fair value of warrant liability at just over 2.2. Increase decrease in inventories 15541. Purchase of property and equipment 122. Net increase decrease in cash and cash equivalents at 3.2. Alright, let's dive into the notes to condensed consolidated financial statements. First, we need to take a look at the basics, the nature of the operations and liquidity. This section explains what Gyre does and if they have enough money to keep doing it. They're a biopharma company selling small molecule drugs and fighting organ fibrosis. They also say they've got enough cash to last at least a year. That's good to know. Next, we can see what the future holds with committed obligations, where they say that if they can make it happen, they got over 12 to give back to the government and a few to others. Diving into summary of significant accounting policies, we can start to get into the more complex stuff. Gyre is a pretty standard company and is based on US accounting practices. This means that they can omit some standard accounting practices as permitted by the SEC. Then, if we check the new accounting pronouncements section, we can see what new rules are being changed, which doesn't seem to have a material impact on the company's financials. In the fair value measurements, they try to show how they value everything based on market prices and internal estimates. They say that cash, accounts receivable, etc. are worth close to what they are on paper because they're short term. It also shows us that the warrant liability that was discussed previously is over 3.4. This is a big deal because this is something that the company owes but is hard to determine the market price. They say risks and uncertainties are present. Like any business, the company depends on its key employees and is affected by external factors outside their control. For example, there is a risk in the long term that because the RMB is not a freely convertible currency, its price could move against them. We can also see that they are in fact subject to a customer concentration risk. That means that if their main customers are to leave, it could be a material risk to the company. Specifically, 3 clients are Sinopharm China Resources Pharmaceutical Group Limited and Shanghai Pharmaceuticals Holding Co. Limited, who account for a big part of their revenue. With a quick look at the stock-based compensation, we can see that a small number of cash to the employees takes the form of company stock and stock options, which is just above 500. Finally, if anyone wants to read the source agreements and documents, they are listed at the end in ITPIM 6. Exhibits. Now let's zoom out and look at this as a whole. Gyre had a pretty standard quarter. What I mean by that is that there were both pros and cons, and overall it seems that the company is reasonably managed, but nothing spectacular. On one hand, they showed net income, which is always good, and they have a solid plan for future sales. On the other hand, they had a dip in revenue, which is always scary, and a lot of their eggs are in one basket with just a few big customers. A bet on Gyre would be that new products can make up the difference with some customer concentration. So, what do you think? Is Gyre Therapeutics a good investment or is it too risky? Drop your thoughts in the comments below. If you enjoyed this video and learned something new, make sure to hit that like button and subscribe for more detailed financial analysis. Also, if you are interested in discussing these filings real time with a community of friendly people, join our Discord channel through the link in the description. Thanks for watching.